goes live on YouTube. Let me go live on LinkedIn. Live on LinkedIn. There it goes. $201. $201. There you go. Live on. Correct. So live on YouTube, live on LinkedIn. Set. Now let's share this message with people on WhatsApp. And here we go. Nishant Mittal group. Perfect. So 201. First 201 was 201 episode, your weekly. All right. PS. These announcements will happen only on TF's groups, so the larger community isn't disturbed from here on. See you then. There it goes. Oh, one second, folks. Good morning, Nishant. Happy New Year, says Mr. Peeyush Sethi. This is good. Just one second, Mr. Peeyush Sethi. Good morning. Whoa. Great. Done. Good morning. Good morning, Mr. Sethi. I hope you had a beautiful year and that your days just keep getting better. If you can hear me, should we begin? This show is going to be slightly complicated, right? Because of what we are trying to achieve here now. It's going to be a bit difficult to follow because it's going to be dense, much more dense, because we are trying to sort of, merge a week worth of data in, an hour, a few minutes. So it's going to be slightly complicated, slightly difficult to follow, but it'll be more rewarding, okay? Because it'll be more dense and more valuable, I'll say. Because a lot of times when we were talking earlier, we used to repeat ourselves too much, right? Now it won't be possible because, So let's begin. Audible. Great. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum bum bum. Good morning, everybody. Welcome to Thinker's Frequency. We are having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, Like they couldn't possibly get any better. Well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis that don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we gotta follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together, and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug or glass or tank, a chalice or stein, a canteen jug or flask or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Beautiful. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we are in this together, which is such a beautiful thing to say. With that out of the way, let's begin. I made a mistake in today's intro. I said daily mental workout. Now it's a weekly mental workout, right? It's not a daily mental workout anymore. But yeah, it's always a good ring to it. But from now on, it's a weekly mental workout. So let's do it. The world has moved quite a lot in the last week, right? So if you've been following, let's begin with the macro, the absolute macro. Uh, the Russia-Ukraine deal is coming close, and while it was coming close, Ukraine sort of had an attack on Mr. Vladimir Putin's residence, right? And that Russia actually proved it. Now, Ukraine said that they didn't do it, but something happened, and that sort of derailed the position. However strong Russia is right now, the deal is not on its priority list, it seems. But Ukraine is trying, and America is trying. And that thing right now is pretty much where it was. However, it's moving closer to closure, right? So that's what's happening with Russia, Ukraine. Thailand and Cambodia have also agreed to an immediate ceasefire, right? Despite all the problems that the countries had, they began fighting, then they sort of didn't fight, and Trump came along. He had a TV appearance kind of a thing where peace was declared, then they got away, then they've agreed to an immediate ceasefire. So that's Thailand and Cambodia, right? Iran's economy has sort of nosedived, right? Inflation has really taken over. The rial is falling, due to which some districts of Iran are erupting in protests against the economy, against the Khamenei leadership. Well, if history is our principle, history is our guiding principle, no protests are organic, and nothing of this sort is organic. This is pretty much orchestrated financially by ostracizing of Iran from the rest of the world's economy by sanctions. So they are sort of playing out Iran's, in a fragile situation right now. US actually attacked Nigeria. So if you're aware, Nigeria has had some conflicts, a lot of conflicts when it came to religious minorities and how they were treating it. So Nigeria has a Muslim and a Christian population, and for a long time, the Christians were essentially getting killed by a lot of terrorist activities, right? Uh, these guys, the Islamic terrorist activities. So US was threatening Nigeria to actually stop it, otherwise it's gonna step in, and they actually stepped in. So they bombed Nigeria's terror camps and stuff, said that they won't do it, and it's one of the many things that they're gonna do in the future, they said, right? That's what happened with Nigeria. Pakistan and Afghanistan skirmishes are on. And the biggest development in geopolitics is basically China and Japan warming up. Japan has announced a $58 billion defense budget, right, against Chinese expansionist policies. Madam Takaichi's remarks were not taken well by Japan. So, by China. So, Japanese, delegation of businesses didn't go to China in a yearly meet. So that happened. That's basically never happened apart from COVID and 12 years ago. right, there was a brief period of Japan and China's diplomatic tussles. That was the only time when this business atmosphere had sort of gotten hurt by the political rigmarole. That happened. So Japan and China are warming up. Taiwan and China are warming up. Taiwan got arms deals from US, and China essentially blacklisted those US companies, those defense companies, for supplying arms to Taiwan. Taiwan's president says that he's fully uh, committed to the national sovereignty cause. China says that it's impossible. They are unstoppable. The reunification of our motherland is unstoppable. So that's happening. Japan is warming up. China is warming up. Of course, India and Bangladesh are also in a very very weird situation. India and Bangladesh are, of course, the Mohammed Yunus government, which is essentially a stooge planted by the Democrats, the US Democrats, right? They are on, and ex Prime Minister of Bangladesh has passed away. So Mr. Jaishankar was at Bangladesh representing India for that event, and that obviously is also a very heated environment. So that's what's happening when it comes to the geopolitical scene right now. Not very easy. Of course, I missed Israel Hamas. That's a story which never gets solved, right? So, in amidst all of these things, you can imagine gold is doing well, of course, right? Silver is doing well. The silver opportunity is has some nitty gritties which you might like to know, because silver is not just a value metal, right? Silver, essentially, the mining of silver happens as a byproduct of mining other metals like copper and so on and so forth. And silver prices also get affected by how the hotspots are dealing with what's their scenario right now. So let's say if a London hotspot, the spot market gets a lot of outflow, right, and there is a problem, then silver prices rise up. As it gets stocked, its silver prices go down. So it's slightly complicated, and I'll read out to you a slightly deeper analysis on what can happen to silver uh, as as written. So I'll just point it out for you. One second, folks. I hope you liked the quick review of the entire situation. We'll go with that for now. So this is everything that happened, at least in the last week. So I'll read out the silver nitty gritties. Just one second, folks. A lot of data here. Yeah. So silver's record rally hides the risk of a sharp reversal, says Mr. Manish Bhantia, right? So he says that silver has staged a dramatic rally, right? But it's a pretty weird play, because large quantities of silver were shipped from London to New York to get ahead of potential levies. The result was a sudden drain on London inventories, triggering shortage across global markets. Borrowing costs for silver surged above 30%. The knock-off effects were felt globally. In India, physical shortages around Diwali pushed the local premiums 15%. Once silver began arriving in the US, pressures eased and premiums normalized in London and Mumbai. But the pattern soon repeated elsewhere. In mid-December, surge of speculative buying in China forced US silver ETF up. Silver has risen 90% since early September on the basis of tariff fears alone, right? Markets have priced in a lot of plays. Now he says that 58% of silver demand comes from solar panels, right? Electric vehicles and electronics. So silver is a pretty utilitarian metal. 58% from solar panels, electric vehicles and electronics. Silver accounted 5% earlier, just last year, 5% of the cost of solar panels. Today, that figure has climbed to 11 to 13%. So its utility value, silver's utility value is rising. From 5%, it has gone up to 11.13%, 11 to 13% just in solar manufacturing, right? Solar panel manufacturing. That's what's happening with silver, right? And then because of this rise of price of silver, solar panels will get affected. So that's basically the second order thinking playing out, that if silver sort of jumps 180%, 170% in a year, right? How do you price the EVs? How do you price the batteries? How do you price the solar panels and so on and so forth, right? So 70% silver is produced as a byproduct of mining other things, just such as copper, right? It's volatile. Now, some history lessons he gives. Uh, in 1979 to 80, silver surged from $6 to 49 and then crashed 90% in the subsequent years. In 2011, silver peaked $48, then fell by 75%, right? The rally may continue, but there are chances that this rally essentially fades away. That's what he says. So those were the numbers on silver. Gold doesn't have those many, uh, you know, volatility plays going on. But of course, this is a very important play to just notice this historical notoriety of silver, right? What's very important, folks, is to realize that I actually got a message from somebody, a viewer of Thinkers Frequency, and they said that Nishant, I am dealing with debt. I'm struggling. I don't know how to deal with the situation, right? I need some suggestions, some help to glide over this. There's uncertainty because of whatever is happening in the job market as well, right? So that's what I'm dealing with as well. And I need, so I asked him what was the constituent, what was the constitution of the entire debt play. He said 40 lakhs of debt, about 28 lakhs of which was uh, home loans and top up loans. That's no problem. 12 lakh is 9 lakh is personal loan, and 3 lakh is friends and family loans, right? So this 12 lakh is problematic. Home loans can glide, that's not a problem. Earning is about 1.6 lakh rupees a month. 25,000 rupees gets saved, right? Not much of savings. PPF home loan is getting paid off. Some gold which is not to be touched. So that is essentially the constitution. Now my personal goal is, so I can't tell somebody to magically wash off their debt, right? That's not a power, unfortunately, I have right now. But what I want to do with Thinkers Frequency is just understand how we can do something that we can wash off somebody's 12 lakh debt with 1 lakh in cash and 20,000 rupees getting incremented, right? You understand? So that's what I'm looking at. So this is not a, I'm not a influencer, right? But we can collectively think of ways to place our bets, or at least track our bets in a way. When I say bet, I don't mean real money. I'm just trying intellectually tracking our positions on where to put in money so that somebody could actually have like a 10x return in, let's say, optimistically a year, right? Or 3 years. That will be phenomenal, right? So something like that we ought to be looking at. If not 12x, something 8x, because that's very important. The personal loan is very high interest, right? So just think of it whenever you're listening to it right now, week on week, right? 52 weeks a year, if those weeks come, if something doesn't happen to us. What we ought to be doing is seeing where the money is going, and are we right in tracking it. So we, in the last 6 months and 7 months, have been correctly tracking a lot of things, right? We've correctly tracked defense, which returned 19% year on year, right? Metals returned, of course, higher. PSU banks did well. FMCG sort of started recovering. So we did all of those things, right? Now what we got to do is be very specific on the kind of returns that we are taking over. So very specific means, let's say if you're tracking a particular industry or a particular company in that industry or a sector or something of that sort, how do you see it playing out in the next year or so? That's what we've got to do. And if that we are able to do successfully, it means we are smart. If we could help somebody, right? So we won't make any recommendations to the person who asked this question, but we lay it out there. We lay it out there, right? So it's not a stock tip play, but we're gonna lay it out there that this has the chance of going up or down because of this principle. So why I highlighted silver with that level of detail was because a lot of people think silver is great, and it is great. However, silver has this volatility play. So would you recommend silver going forward, right? With all that's going on for silver, silver obviously is very utilitarian, as we talked about. It's used in silver solar panels, EVs, and so on, right? Batteries. And so definitely silver's value, there is a crunch of silver, so there is a shortage of silver when it comes to these tech companies, the data center operations, and so on and so forth. Now this according to this analysis, silver should keep going up, right? But by how much, right? And if it goes up, and by what we do, would you recommend somebody to pay off their debt, especially when they're in a fragile situation, with silver as play, right? Because silver knowingly has a downside risk of about 50 to 60%. So let's say if they spend 20,000 rupees in silver, they can lose essentially half of it, more than half of it, right? If something goes wrong. So would you do that? So that is what we are trying to do here. Mr. Tushar Tiwari says layout in words or some tracker kind of a thing. So we won't be able to do an Excel tracker kind of a thing, although we can. So we can make a worksheet, right? And share in the Thinkers Frequency WhatsApp group that I've created. But yeah, for now, words would be great. We are putting it out there. We're gonna be watching it again and again. So we'll be looking at that. The syntax of this particular thing can be improved, but the goal is to go 12x, right? From 1 lakhs, and then of course 1.5 lakhs yearly in an SIP kind of a way, 20,000 rupees, right? So if you start with 1 lakhs and then add 2020, so basically 2 lakhs by the end of a year. How do you make those 2 lakhs, 12 lakhs, essentially? That's what we ought to be looking at from a very granular perspective. So let's move on, folks. I hope you like that challenge. Let's have a challenge for all of us, whoever's watching, right? All the people who watch us, right? There should be an intellectual challenge. Otherwise, it's just intellectual masturbation, right? It's no good. We don't want to do that. So let's move forward. Moving on, folks. Okay. Asset allocation is a very, very important thing, and it's a way of predicting future, right? Let's move on. So exports are likely to increase to $950 billion by FY27, right? That's what the trade pacts are saying. A lot of trade pacts getting signed up, and that's what's happening here. A very good show when it comes to the BTAs. In England, FTA is also going to be happening, getting enforced anytime soon, and then more deals. Mexico's exports are in trouble because those sanctions are going to play out very, very soon, right? So that's something that's going on. $950 billion, 850 this year, 950 in FY27. Mr. Tushar Tiwari says, if it's a challenge, then let's measure it in the tracker. Okay, sure. Let's do that then. Let's do that. India's exports are going $950 billion. We had the split. We pointed out the split. Some $480 billion was services. Some $330 billion was, $480 billion was products, merchandise. $330 billion was services. If you're talking about exports, we've got to talk about China, right? China's industrial profits have gone down by 11% when it comes to their export players. However, China's PMI has gotten positive. For the first time in a long time, China's PMI has gone to 50.1. 50.1 PMI, we know how to read PMI. Above 50 means the factories are expanding. Below 50 means the factories are contracting. China was looking at something like 48.7, 49.8, 49.6, 47.8, and so on and so forth. for the first time, they've really gone 50.1. They're losing out on profitability but expanding. That's the rate of growth. And then China obviously is making a $1 trillion in profits that we've discussed already. So Chinese exports are doing what they're doing. PMI is rising. India's PMI lies at somewhere around 59.6, 58.7, and so on and so forth. So Indian factory expansion is pretty cool. When it comes to exports, you also got to tie up what China is looking at when it comes to their GDP growth. So China is looking at a 5% GDP growth. President Mr. Xi Jinping says it's unprecedented. It's pretty huge. So that's what's going on, right? In that context, India's exports are going to be $950 billion by FY27, right? So that's what's happening. That was very important, right? So when we are looking at exports of $950 billion net, they are essentially making profits of $1 trillion from the exports that they're doing, right? So very important to understand the scale of things, right? Let's move on, folks. We've already talked about how auto is gonna do well, and GST 2.0 has provided the auto push. We've done that enough. We're not gonna talk about it. If at all there is a new viewer, and I don't see a new viewer, auto is doing really well. Some 11% growth rate when it comes to two-wheelers and stuff, right? Pretty awesome. So we're not gonna repeat ourselves on that. Let's move on, folks, right? So a pretty big deal happened in the world of FMCG. ITC's stock fell off by 10%. Why? Because extra levies happened on tobacco. Did you know that? Tobacco got levied, right? So there was about, now it's 40%, then there's a levy, then there's National Building Fund, and so on and so forth. So a lot of taxes. So 10 rupee and 20 rupee cigarettes are going to be expensive, more expensive. These people say that cigarettes are going to be illegally traded, because for every one cigarette is illegally consumed, right? So that's what these people say. And they say that if the legal deterrence is so loud, the illegal smuggling of cigarettes might just become more mainstream. So they're saying that the split might improve. Do you buy that argument, folks? Do you believe that cigarettes should be taxed at about 50% net level, 40% GST, excise duty of 91% on gutka, 82% on chewing tobacco, 82% on zarda, 40%, and then all those taxes? Do you believe that's a good idea, right? So this has to be looked at in context, of course, obviously. Why does it have to be looked at in context? Because we've been reducing taxes like really well, right? So we've rationalized personal tax, we've rationalized GST. We've been trying to take out the tax burden in a very big way. Well, somebody's got to feed the monkey, and the sin tax is a way to feed the monkey. So do you agree that cigarettes should be taxed as the way they are getting taxed? Do you think that's a valid idea? Do you think the deterrence tax on cigarettes and sin tax in general would lead to more smuggling, right? I believe no. I don't believe cigarettes are going to be rationed illegally, although they might be, right? There's a lot of corruption because they in the lower value segment, right? In the lower value segment, the incentive to sort of go illegal is pretty thin. So margins are thin. It's going to be a lot of hassle, right? It's a 20 rupee cigarette, 23 rupee, 28 rupee cigarette. The 10 rupee cigarette would be around 17, 18 rupees cigarette, right? It's going to be difficult for these people to actually step aside and do it illegally, because that's going to be difficult. So I think it's not a plausible scenario where smuggling might happen of cigarettes. But yeah, of course, that's a valid point for these guys to put up a case that don't tax us this much, right? However, I believe it's a great thing. I don't smoke, so I'm not affected by this particular move. But bad news for smokers, all right. So ITC investors must also have taken a heat. 12%, the stock went down. 10% yesterday. 20% overall. So it's a pretty big deal, right? I need to correct myself, folks. In the last session of Thinkers Frequency in the 200th episode, I had said something about per capita income, the rise of per capita income. Okay. And I had said that GDP, essentially, the real GDP rise happens at about 7%, right? So per capita income will also rise at about 6 to 7% per year. That is factually correct. However, while I was explaining it, I said that the per capita income is offset by population growth of the country, because GDP per capita is GDP divided by population, right? So per capita by population, GDP per capita will grow at 6 to 7%. Till here, I was right. But while explaining, I misspoke, saying that India's population essentially rises at about 5 to 7%. That is wrong. India's population rises at about 1%, at least according to the data, right? So most of the GDP growth is not offset by population growth, and that's why we are being able to see a GDP per capita rise, right? Otherwise, if the per capita, if GDP grew 7% and population also grew 7%, we'll have no per capita income rise, right? We'll be zero, right? So that obviously doesn't happen. I just misspoke while explaining the paradigm. Sorry for that. I actually had to connect the story with the cigarette buying population, right? Cigarette buying population has a lot to do with per capita spend. We are also looking at, as we are talking about spending, right? There was a news about how the GDP data is going to be looking at household debt, right? That's going to be a part of the whole GDP paradigm. That's going to be very, very interesting how that plays out. For now, let's move forward. Moving on, folks. Yeah, nuclear play, we've talked about that. Gold lends most glitter to golds, 125% surge gold loans. Well, that's okay. We've talked a lot about that. Gold loans. So if you're talking about gold loans, folks, can we think about Muthoot Finance as a share? Muthoot Finance share. So Muthoot Finance 1 year has gone up by 7%, 70%. So since past 6 months, we've been talking about how gold loans will rise, are rising, and so on and so forth. We said it as a no-brainer. So since past 6 months itself, it has gone up by 50%. So that way our bet was right. Now, past is past. Experts are not experts of what was. Experts are experts of what will be. Do you think Muthoot Finance has a chance of keeping up the gold momentum, gold loan momentum? Because Muthoot Finance has a very big AUM when it comes to gold loans, right? About 2 lakh crores. Do you think that will happen? Right? Gold loans jumping up. Is it possible that Muthoot Finance continues its momentum when it comes to doing that? So let's add Muthoot Finance in our tracker. Okay? Muthoot Finance. Let's track it. We'll see what happens to it. Let's move on, folks. Devyani and Sapphire, these two QSR plays. Devyani runs the KFC play, and Sapphire runs Yum Brands, right? So that's what's going on. Devyani is owned by diversified entrepreneur Ravi Jaipuria, chairman of RJ Corp's Varun Beverages, right? Bottling partner of PepsiCo. Sapphire was set up by Samara Capital to operate Yum Brands. They are merging. They are going to be biggest QSR operators of this country. Let's move on. So Muthoot Finance is number one on that tracker, right? Silver, we say, is very volatile, so we won't advise it, but let's add it to our tracker as well, right? Let's call it Thinkers Frequency Index. Silver to avoid. Moving on, folks. As I said, Vodafone's problems will only get solved. Vodafone's problems will only get solved if the government forgets about its dues. That's what the government is doing. 87,000 crores of debt. They're going to be looking at 10-year delay as far as their payment is concerned, then we are going to rejudge the payments. So they're basically going to forget what they're doing, right? For the debt the Vodafone owes, and also Vodafone is basically has a pact with the UK company to pay them a few thousand crores, some 10,000 crores. So this was a merger pact where there was a clause that the legal liability or any sort of liabilities 10,000 crores will be borne by the UK play. So they paid about 1,600 crores and now they're going to be paying 5,000 crores. That's going to help them pay some debt. But the only way for Vodafone was to survive, was to just forget about the debt for the government, and that's exactly what's happening. So Vodafone, not to be touched, right? Let's move on, folks. We've talked about how UPI is great. No point. Chip industry is pushing back as market-linked DLI SOPs. So DLI is design-linked incentives. We've talked about employee-linked incentives, production-linked incentives. Design-linked incentive was to help the chip industry. They say, so the government plan was that we're not going to be footing in the bill primarily. It's not going to be a reimbursement kind of a play. We're going to be 50-50, right? So if somebody is having a deal, the government is going to take half of it, right? And there's going to be a 15 crore limit to that kind of a play, right? That's what the government said. The chip companies came out saying that this is not a great idea because, there should not be 50-50. The government should do all of it. And then also there shouldn't be 15 crore cap. So the government says if you cannot raise any money from the market, right? It's 50%. Either it's the idea that's not working or there's something wrong. We don't want to be the only people who foot in the bill. We want to be, whatever terms you raise money, we're going to contribute half of it on the same terms. And then there's also a caveat. If the design gets exported, the IP gets transferred to outside the country, the government wants 3x their money, right? Which these people are not happy with. So do you support the government when it says 50% is what it should contribute and also should be putting it with the market? I definitely do. It's a good, smart, pragmatic thing to say. So no problems there, right? Let's move on. Car sales and volumes rise 6% year on year. We've talked about that, right? 8.2% in the calendar year. December sales grew 26%. We're not going to talk about the car sales anymore. We've had a very, very big. But if you're talking about car sales, folks, and they say that car sales are going to be predictable when it comes to their success, do you believe any car company should be picked up in the index? Do you think any car company has, or an auto company, mobility company, has potential to return some money so that that person's debt can be paid? Do you think any investment in a car company would be prudent in this scenario? I don't think car companies have the potential to return so much, right? But TVS has done very well. TVS has done very well. As Ola fell, the EV2 market, two-wheeler market essentially got taken over by the legacy players. TVS was the biggest beneficiary of it, right? How long will TVS be able to continue that rally is a question to be asked, right? But other than that, two-wheeler companies, right? Ather, we have already picked on Ather. We've already more than doubled our money in 6 months, right? So there's going to be a limit to how fast Ather can go from here as well. But let's keep TVS and Ather, right? Let's keep that. Four-wheelers, as far as four-wheelers are considered, I am not very positive. I do not believe that these people have a lot of, I mean, they are growing, sure, but I'm not, it cannot be a multi-bagger which can help the 12x cause, right? Let's move on, folks. Talked about the cigarette flex. Institutional capital tighter norms rewrite India realty funding rules. So there's an update on the realty market, folks. The home house sales have gone down. What did we tell you would be the job second order effect of job losses and tighter play? Home loans, even though the home buying category has gone 6% on volume terms, right? The value terms, sorry, in value terms, the volumes have gone down by 11%. So that's what's happening with the real estate market, domestic, right? When it comes to the real estate investments that they are being able to get, that's pretty active. And office segment is a big part of the story, right? So that's what's going on. Very interestingly, now if you look at the capital structure, right, the whole RERA thing and the REIT thing and everything, what they've done is earlier the real estate companies, let's say JPs or anybody, they used to be raising money at an org level. So when they used to be raising money at an org level, they used to be swindling money from one project to another, which essentially led to a lot of problems when it came to the predictability and financial fiscal responsibility of that project, right? When this project has some cash, this project goes here, this anything goes wrong, everything goes down, right? That's what used to happen when it came to real estate. Now money is being raised when it comes to real estate on a project to project basis. That is leading to more accountability and more predictability when it comes to real estate projects and their completion of it, the quality of it, the accounting of it. So that's a paradigm shift. Developer funding 25-30%, institutional finance 45 to 50%, home buyer collections 25 to 30%. That is the economics of real estate projects, if you did not know about it, right? Funding model is okay. Banks come much later, and so on and so forth. So that's what's happening. Porno record is maintaining lead in the alco-bev market. However, the big news is that the 87%, the Zoomers are they called? Gen Zs or whatever? They are drinking 87% less than millennials, the alcohol play. So that is a very, very big news. This is concurrent with what we've been talking about for over 6 months now, right? Past box office techs or take a pay cut, streamers get tough on flops. A lot of people, right? I see a lot of bullshit on internet claims by people that movie making has become a very solid business because a lot of costs get recovered even before the movie goes to the theaters, right? You sell your rights to OTTs, you sell your music rights and everything. It's so great, man. Everybody should be producing movies according to these guys. That's not what happens. So there's a report on how streamers are essentially making renegotiating basis theater performance. So if your movie doesn't do well on theaters, right, the streamers essentially come down by a lot and then they buy your movie for nothing. So your movie, the only way for your movie practically is to make money using the box office, right? Streamers can provide up to 30 to 40% of your movie budget or something of that sort, or let's say your movie revenue, but that's not a good idea to depend on that. Just making it clear, movie rights do not sell at fixed value. It depends on the value of your box office, and that value is determined, the value of your movie, and that value is determined at the box office. So don't think that movie business is sure shit. It's not. Mr. Tushar Tiwari says, if housing numbers are down, then banks and housing finance companies, home loans will have a slowdown too. Yeah, that's what's happening actually. Microfinance is down. Home loans are also down, and that's not down by a lot. So when you talk about the value, numbers are still up, right? The more expensive homes are still selling. So that sort of stays a little intact, right? Let's move on, folks. Manrega work demand down by 28%. That means a lot of work opportunities in the rural sector. That's gonna be great. Manrega will now be called as G-Ram-G. Moving on, folks. GST is up. That's okay. India valuations cheaper now, but pricier than regional pairs. If you look at the markets, folks, PSU banks returned 30%, metals 29%, auto 23%, India defense 20%, 19.3%, finance 17%, IT was minus 12%, media was minus 20%, realty was 16%. So that's what you're looking at, the stocks return. Now, do you see what we've been talking about for 6 months? Do you see it all playing out very, very well? Are you proud of it? Right? We said defense, we said banking is going to improve, Metals, we didn't talk about much. Auto was supposed to improve by the end of it. It did. We told you IT was bad. IT is the worst performing, about minus 12%. The reality, we said it's gonna fall because last few years have been very hot, right? And then yeah, so it's a very very important way to make money is to not lose money, right? And if we can just keep away from the duds, that's a very nice thing to do, and that's also something we've got to be very careful about. Let's move on, folks. The rich, the poor, the crude, and the mood should be going. Rising income, steady demand, and sustained capex, setting the backdrop for key sector performances. So it's a sectoral review that we've done already. Let's move on. Automobiles, they say they're going to be going well. Banking and finance is going to improve because by FY26 mid, the net interest margins are going to stabilize and then they're going to rise. So banking industry's growth has sort of gotten delayed because of the rate cut, right? FMCG is going to be okay. IT has some headwinds. These people are not clear. I say stay away. Metals obviously is okay. Oil and gas could be good. Oil prices are gonna go down. Crude is down. It's supposed to be down. If it stays down, the oil marketing companies, they'll benefit. Power is going to be good. Pharma is going to be good. Lending rates edge up to 8.7. Fresh loans get costlier. Why are loans getting costlier, folks? A question for everyone. We've talked about this, so I expect a very nice answer. Why do you think loans are getting expensive? Even though RBI cut down rates. We've talked about this incessantly. I have tried to explain it very deeply, so I expect some good answers. Viewers, please do the honors. Let me know why loans are getting costlier despite rate cuts by the RBI. That shouldn't happen, right? When the rate cuts happen, the loans are supposed to get cheaper. When the loans are supposed to get cheaper, money activity should spur. That's the principle of reducing rates, right? Why are rates rising despite cutting of the costs, right? Come on, folks, come on. We know about this. We've talked about this. If you do not remember, say you do not remember, so that I can say it quickly because I don't want to wait. We have a lot to discuss, right? It's gonna be a heavy show. So you do not remember? Should I say take it as do not remember? Just write do not remember if you do not remember. Forgot. Come on. Forget about it. It's because of the liquidity crunch, right? The banking sector has a liquidity crunch right now. Remember the RBI wanted to inject 2.9 lakh crores when it came to liquidity, right? What was that for? Because if the banking sector, the banking market doesn't have liquidity, the weighted average lending rate sort of starts climbing up, right? So the RBI has to push in liquidity. When there's surplus liquidity, that's also a problem. But when there's liquidity crunch, that's also a problem. So in order for the repo rates to actually translate into the rates, right, there has to be ample amount of liquidity. That's why RBI wanted to inject about 2.9 lakh crores, right, in a different way. They wanted to do dollar swaps. They wanted to they usually do VRR, VRRs. Those are the two things. Then they essentially do bond purchases, right? So that money can go into the system and so on and so forth. So it's a liquidity issue. And RBI wants to inject 2.9 lakh crore of liquidity. As it does, that's why it's going to be difficult. That's why it rocks the boat for the entire banking play, right? Once those rates get translated, once there's ample amount of liquidity in the banking system, that's when the rates start falling down actually and start meeting the repo play, right? So that's 8.71. Foreign banks meanwhile lowered lending by 6 bps, 8.11. 10-year sovereign bond yields, sluggish deposit growth, which have constrained bank ability to price deposits downwards and in turn limit the pass-through of policy rate cuts to borrowers, right?
System liquidity has been tight. 10-year sovereign yields have hardened. Deposit repricing remains difficult for banks amid lower deposit growth. Until systemic liquidity conditions improve, banks will find it challenging to pass full benefit of the rate cuts. Uh, that's what's happening. Moving on, right? So yeah, I'm not missing out on anything. Mr. Bhaviksha asks, if the banks don't have liquidity, how come the government is coming up with a credit guarantee scheme loan for exporters? Well, that's no, it's not like the banks don't have liquid. It's a very the weighted average lending rate. It's a very short term kind of a thing, right? So how banks manage money? There's overnight rates, right? It's very overnight. That sort of defines how a, a very short term period. Then there's the WALR, right? So this is what liquidity adjustment facility is. So the government scheme has almost got no bearing with these short term plays. Those are long term plans for exporters. So that is a long term plan. That's the government assuring that we are going to be parting with this much money uh, to the exporters through credit guarantee. That's a government welfare plan, or let's say the government incentive subsidy plan. This is the bank's day to day, how the liquidity essentially is getting managed by the RBI's moves of bond sales, of OMO, open market operations, of dollar swaps, of everything. So this is that. Now this basically is going to get okay in a very short term kind of a way. So it takes time for banks liquidity after a rate cut has been done, right? The bond market gets weird, the bond market stabilizes, and then the liquidity starts tapering down. So this has nothing to do with long term plans. This is month on month kind of a thing, right? I hope that clears it. This should be clear because I've tried in those 6 months, I've repeatedly tried telling you about VRRs, that's variable repo rate auction, or VRRs, variable reverse repo rate auctions. These are two ways in which RBI tries to suck liquidity out of the system or inject liquidity in the system. And that's how these things sort of worked out. I've talked a lot about liquidity adjustment facility. I've talked a lot about overnight rates and so on and so forth, right? The whole play. So I hope you are going to remember this, because this sort of affects day-to-day movements of things, right? So that is done. Let's move forward. How much time do we have? It's 9:15. Okay, we are very quick today. So let me just find out a few things. Although I've tried to be very tight with everything, let me just be sure, because I don't want to miss out on something very important. And you know the drill now, right? You know the drill. We have to think about pairing the debt of that person, right? Quickly, as soon as possible. Suggesting, if not suggesting, at least laying it out there so that people can essentially track those things and see, oh, this is what Thinkers Frequency had discussed, and this is how it panned out. So it's a methodical way of predicting the future, right? GCCs ditch mass hiring to focus on AI. Well, that's okay. GCCs, by the way, are still hiring a lot of people, right? A lot of offices. Andhra getting a lot of money. That's very awesome. Let's move on, folks. Global customers come knocking. India Semiconductors readies chips. Well, we've talked about how when chip manufacturing begins, there's a lot of action. It's not just going to be a few clients, they're going to be diversifying their client base. It's just going to be a new industry. And that's exactly what's happening. Now, speaking of chips, should we have something on our radar when it comes to chips, right? Keynes had a governance problem, so don't touch anything which has a governance problem, right? That's the golden rule of life. But anything else, there were some plays that we were talking about, right? Some really good RRP, was it? I don't remember, folks. Can you remind me of what the stocks were which had something to do with the share prices? RRP was that scam stock, right? Which just went up like nothing. Yeah, 72,000% in 5 years, even though it's barely a company, right? But which was the real company that was doing something when it came to the SNP, chip play. We've got to track that company, you know, just be sure of that. Don't forget it. Let's move on, folks. Yeah. We've talked about OYO's uh, thing, IPO, right? Gold, silver likely to extend rally. Well, that no shit, Sherlock. Moving on. These people say a lot of high conviction bets. Info says Umber Enterprises, Eureka Forbes, Bank of Baroda, NRB. Nah, let's forget about that. Move on. Okay. I hope you're enjoying the sip. The weekly episode. Does the weekly episode feel better or the daily episode, folks? Are you feeling the difference already? Right? 4,500 crore scheme rolled out to aid exporters in new markets. 6-year intervention to focus on MSMEs, index and works to evaluate exporters' performance. 4,500 crores by the government is being laid out, right? MAS, this is MAS, Market Access Supply. It's a part of the 6-year export promotion scheme, mission, 25,000 crores. It's gonna help. And some duty has been imposed on steel imports, 3 years, to counter cheap imports. That's protectionism playing out for India, very necessary. Otherwise, Indian steel guys will just die. A 12% tariff notified for the first year will be reduced to 11.5 and 11 in subsequent years. Some moves to save the Indian copper and steel play. Let's move on, folks. Fiscal deficit pretty much in target, 62% of FY target. They say they're going to slow down capex. A lot of capex was front loaded in this fiscal year, right? Last one was election year and so on and so forth. So now the fiscal deficit earlier at this time was about 52%. Right now it's 62.3%, but it's going to be at 4.4% of GDP. That's the target fiscal deficit, right? That's going to be maintained. They're going to taper down the capex, the government capex. Let's move on, folks. RBI flags swelling slippages in unsecured retail lending. Now, let's say this is the stat, right? That unsecured microfinance, personal finance, that's been a problematic play. That's what Madam Padmaja Reddy also said, right? And that's exactly what plays out, right? People who have been exposed to these products, they don't feel nice about it. So statistics, sometimes they feel very alien, but sometimes, they are very right, unfortunately. I'm talking about the cases that we talk about personally, right? People, moving on, folks. Household debt at about 5-year average. Household debt rose to 41% of GDP at the end of March 25. It was at 38.3 earlier. So that's not much of a difference. Let's see. Let's move on. Oh, this is very important. I'm glad I'm not missing it out. Telcos seek higher international call rates to curb spam. So telcos say that we figured out why so much of spam is happening. It's because the international call rates, our receiving rates, are nothing. We don't have anything. So when Indians make international calls, Indian telcos have to pay like 6 to 13 rupees. There's a charge. It's called, what is it called? International Call Termination Charge, ITC, right? 2 to 19 rupees per minute to foreign carriers, but we receive just 0.35 to 0.65 paise. Because Indian telcos have no international call termination, right? Was it? International termination charges, call termination charges. That's why spam happens from all these international numbers. If you raise this ITC, right, for Indian telcos, they'll be able to make more money for receiving calls from international carriers, and that will automatically curb spam. What do you think about this? This is smart, right? I did not know about this. So at the moment they charge 0.35 to 0.65 per minute, while they have to spend 2 to 19 rupees per minute to outside carriers, which leads to a lot of spam play, right? And they say if this is fixed, It's going to be amazing. I agree. I agree. And there's another case which is very interesting, which I'm glad to have not missed out. It's a guy, a lawyer, has come out against the online real money gaming ban, and he says that he's played 1600 games, right, across tournaments, and he has made money consistently. And because he's made money consistently over 1600 games, it proves that this is not a game of chance, this is a game of skill, which means it is a rightful way of earning a livelihood, which means the government cannot ban it by a blanket ban on online money, real money gaming. That's what his argument is. And then, of course, he says there's a procedural problem. So this is a fundamental philosophical issue, and then the procedural issue that they didn't consider stakeholders' opinions and so on. Now, what do you think about his legal play, folks? What do you think? Is it smart? Is it a smart legal argument that, hey, here I am, 16,000 games, and I've been able to make money consistently, which means this is not a game of chance, this is a game of skill. If it is a game of skill, it is a rightful way of making a living, and you cannot cut it down. Do you think it's a solid legal argument? Any lawyers in the house? Lawyers make money, right? It's gonna be this guy is a lawyer himself, so he's gonna fight this case. What do you think? Do you like his argument? Do you like his argument, folks? Come on, be quick. I like his argument, but only on the surface. So number one, a way to ask is that this evidence essentially goes out of the play, because the government how do we know that you haven't played any other games apart from this? So the 1600 sample space that you're showing, that you've lost some, you won some, and you say this is, how can we be sure that you've not played any other games, right? Through other accounts, through these accounts and so on. So your evidence is not conclusive, right? And then the macro picture. So players like you, as compared to the overall market, the number of players that are essentially like you would be 0.0001% or 0.01%, which is at least in orders of magnitudes lesser than people who make money in the this FNO thing. So how can you say right to livelihood, clever guy, average median win of the platform matters, right? So clever guy, definitely. I like this argument that, hey, I've made money, how can you put it out? But it's just this is lawyers trying to be famous. Let's move on. Ministry in talks with states to give some drug companies more time for GMP compliance. We've talked about this a lot. Pharma companies were sad for new compliances. Well, they've got to do it. Moving on, folks. Center is planning deregulation. Vodafone breathing easy. We have talked about this. Yeah, good. 1 second, folks. I'm just making sure that you are up to date with everything important when it comes to this week, right? So Adani is looking for more traffic, more routes for its airports. Spectrum plan is getting rolled out for next gen networks. Well, that's okay. Property prices to stabilize next year. Well, of course, the demand is going down. A lot of things you can just predict now, right? Moving on, folks. Reforms, a lot of reforms. We've talked about this. Yeah. I just want to be very sure. Ideally, the way to do it would be having a proper script, but I can't do that. But I hope this is good for you. Varun Beverages bought Twiza. We talked about this. Banks on a stronger footing. I told you. Banking sector showing stronger profitability in the last quarter of FY25. I told you. Let's move on. This is very important, folks. National highway construction has slowed down to a decadal low of 17 kilometers per day. So we've been very proud of the pace at which roads were being constructed, right? In 2014, back in 2014, 12, we used to conduct about 9 kilometers per day, 9 to 11 kilometers per day. Then we moved forward. We had 29.2 kilometers per day in 2024, 36 kilometers per day in 2021, 2020, 2021, right? So now we have come down to 17, which is almost as much as what we did in 2015. That was 16 kilometers. So our pace of road construction has gone down. This is not good, but this was supposed to happen because you know what? Some fruits are, what do we call it? Already got the lower hanging fruits. Now it's going to be tough to sort of acquire land, tough to keep up with the process, tough to find new places, and so on and so forth. It's going to be a bit difficult, right? So that's what's happening. Moving on, folks. Scale up phase aways, electronics manufacturing scheme, center defense play. We've talked a lot about that. Indians are bitching and moaning about going to US. I've got a very interesting story about US, folks, which I'm going to tell you. It's going to blow your mind, right? So let's move on. Just remind me, I don't want to forget it. It's a pretty interesting story. Radico Khetan bets on premium products to drive spirits demands. You know why? Because nobody's buying alcohol anymore. Moving on. TVS shines. Coforge bought Encora. Coforge is a mid-tier Indian IT company. It bought Encora, which is a US-based IT company. It's going to have its own, new access to US markets. It's one way for an industry to pivot, right? Let's move on. Yeah, I'm pretty tight, man. The crash I gave you in the beginning covered a lot of things. Defense Ministry has purchased the purchase of 79,000 crores, a lot of money for defense purchases. That's awesome. We've got to be mindful about what happens when it comes to the defense budget back in February, how that plays out. Defense stocks are obviously on our radar. We're going to keep them in the radar. And then railway capex is also going to be rising. Railway stocks are seemingly very interesting because all the companies, Railway, Titagarh, RVNN and all, they are about 50% lower than their peaks 1 year ago. So they have a lot of room to grow. Let's see how that plans out. So add defense stocks, Masgadog, HAL and all, and RVNL, Titagarh and so on and so forth to the tracker, please. We'll make it sure. We'll see what happens to that. Yeah, pretty good. We're pretty good going. Let's move on, folks. We're almost there. Don't worry. Ola's market share halves. We've talked about that. Yeah. Household debt, net investment to be a part of GDP numbers. We've talked about that. Yeah. Robust rural demands drive durables growth. We've been talking about that for a very long time. Himadri business going into battery manufacturing. That's okay. Defense in focus after Operation Sindhur. That's okay. The last bit, folks. China's industrial profits. I've already told you about it. UP bringing in a lot of investment money, just as Telangana and Andhra Pradesh. Andhra Pradesh is winning on all systems, right? We've talked about this. Winter reigniting power demand. Well, that's okay. Khapli Atta returns, Indian urbans taking healthy turn. This is related to the anti-wheat play. The government has been trying very hard to push Shri Anaj, that is millets and so on and so forth. Khapli Atta is a step in that direction. Its price is about 3 to 5x that of wheat, so its mainstream adoption is a bit of a challenge, but it's moving forward. Very important to note, folks. This is a paradigm shift which is happening when it comes to Indian eating habits. Right in front of our eyes, never happened before. Let's move on. That's cool. Unit sales down. We've talked about that so well. 20% decline. We've talked about it. Yeah. I'm going to be saving the best. I'm saving the best news item for the last. So hold on. Hold on. I'm just checking. I don't want to miss something very important because we do this only once a week now, right? So I'm just making sure that I'm not missing out on something. But I have the most important, the most entertaining thing for you towards the end. Holy shit, I was good, man. The brief I gave you in the morning, in the beginning, it was tight. Anyway, so the biggest news, which you should know, we've covered everything, by the way, from an Indian perspective. America got, there's a 23-year-old YouTuber in US called Nick Shirley, and a 60-year-old uncle called Uncle David, right? So these people, what they did was they were looking at daycares in Minnesota. That's a state in America. And they never had kids. So Uncle David said that I've been around these Minnesota based daycares and they never have kids. I've been there for 9 years. They never have kids. And then I looked up the numbers and then I found out that these people have gotten millions and millions of dollars in funding. They get millions of dollars in funding every year, but they don't have any kids. So what are they doing with these millions of dollars? So what this 23-year-old YouTuber did was he went and started knocking on the doors on video on these daycares. He found out that all of these daycares are being run by Somali people, right? Somalians, and they don't have any kids. They are basically running a sham operation. In fact, their spellings are wrong. Leering Center instead of Learning Center, Leering Center, right? And it's become a meme of all times. This video has gotten over 100 million views on Twitter, right? And then there's YouTube, and it sort of uncovered a major fraud which people say is greater than the GDP of Somalia. So all these Somali people, they got this Democrat elected, Tim Walz, the vice president campaign. He was running with Kamala Harris, right? And those people, they give money to these Somali healthcare guys. These businesses these healthcare businesses sort of channel that money back into political donations so that that money keeps going in. And that's like a fraud of the century, which is happening. It's almost unbelievable. It's extraordinary. If you've not watched that video, you should. Nick Shirley, Somali neighborhoods, and all of those Somalians, they used to be known for female gender mutilation, but they're now known for pulling off the greatest, most terrific, most intelligent scam of all time, right? So they're all on welfare. 81% of Somalians living in US are on welfare, and then they are pulling off this particular scam. So all of these neighborhoods in one day, that Nick Shirley guy, that 23-year-old YouTuber, so young, right? So this particular play they did, right? In one day, they had a fraud counter. How much money have these daycare centers gotten, and are they having kids or not? And they found out that they don't have kids. And they, in one day, they got $100 million worth of grant given to these Somalian daycare operators. So these people, these Somalians who've come to US thanks to Democrat practices, right, of unchecked migration, in fact, incentivized illegal migration, given asylum and so on and so forth, right? These people have pulled off a scam which is greater than their country's GDP. And now they're living in mansions in US And as they live in mansions, those mansions are registered as daycares where they're basically just taking care of their sister's kids. So let's say if I'm a mother, and there's another mother, right? My sister, she has 6 kids because that's Somalia, right? So I'm gonna be taking care of her kids while on being welfare, right? That's my daycare. She's gonna be taking care of my. It's just unbelievable. It's fraud. Their websites, their numbers don't work. Their websites are, lorem ipsum. That's the description that's been going on for the website. So it's $100 million fund just one day uncovered. That video has gotten viral to know it's the greatest journalistic win of I don't know for how long, and nobody knows about it. Nobody knows about it. The legacy media hasn't covered it, right? They have started covering the CNN guys and they've started chastising Nick Shirley himself, right? While, and it's just unbelievable how these people are coming up. You know what they did and defense when people said that you're running scams? They said that our papers have been stolen. Our client sheet, our grant papers, everything has been stolen because people want to say that we are scammers. Those stolen are documents. They didn't have documents. They're saying that our documents are all stolen. We don't have any records of customers. We don't have any records of clients. We don't have any records of daycare. All we have is just the money we've gotten. And you know what? Some of these were criminals, indicted criminals, and then their family members were given the renewed licenses of daycares on that day itself, as soon as those people were let off the hook. So it's just unbelievable the kind of scam that has happened in US. And they're saying it's not just Minnesota, it's everywhere. It's everywhere. So US it's a total shithole now. And this scam reminds me of India, right? This is what our babus do all the time, right? This is what we do. And this is pretty much how they operate. So we've also allowed a lot of Bangladeshi immigrants, a lot of, illegal. They sold their country out there. We are selling our country out here. It's just very, very similar. That's the beauty of the whole, studying US politics in a way, because it's a mirror to how India operates, but at a smaller level. So their scams are they are in dollars, we are in rupees, but we're doing just this job. That was the story, guys. Go check it out. It's unbelievable. It's just extraordinary. Type Nick Shirley viral video. It's a 42-minute video. It's just unbelievable. The second news, which is a somber note, is I heard Scott Adams, sir, and he says that there's no good news when it comes to his health, right? It's not gonna work out. His doctors say there's no chance that his lower body gets recognition. It's feeling back. Its heart rate is going down. He says, I'm gonna keep doing the show till I can. I've not made decisions. So even now, he's still doing Coffee with Scott Adams, right? Despite being in pain, he says, I have cough bouts which last for 6 hours, 8 hours, 10 hours. It's very difficult. January is going to be the month where it turns one way or the other. So he's basically, as he dies, he's taught us to live. I have done Thinker's Frequency for 201 days now, 200 direct days, all because of him. The kind of inspiration he's provided, the kind of value that he's added to my life, to everybody's life, to whoever's life he's touched, is just insurmountable. It's incalculable. It's indomitable. It's just unbelievable, right? I'd recommend everybody to read How to Fail at Everything and Still Win Big. It's a beautiful book. And let's pray for Scott Adams, sir. And in his honor, I have this sip, right? It's beautiful. He taught me this. And with that, we come to the end of the 201st episode of Thinker's Frequency, our weekly mental workout, our weekly dose of insights and analysis that don't lead to paralysis right before we punch in. We're gonna punch in. It's 9:42. We're very late. But it has to be because, it's so much content to consume, so much of information. I hope you have a beautiful day. It's time for you to punch in. Beautiful day personally and professionally. I'll see you next week, hopefully. Right, next Friday, same place, same time. Please take care. Have a beautiful day. Bye-bye. Oh, yeah, I'm sorry. I need to thank my viewers and my new patron, Mr. Rohit Bahadur, who inspired me to actually keep continuing this in a weekly format at least. It sounds like a great idea. I had fun. I hope you had fun. I hope you learned a lot. I hope it was exhaustive, nice, right? He's joined in as a patron. Thanks a lot for that. Very grateful for the patronage. Mr. Peeyush Sethi, Mr. Codename Alpha, Mr. Tushar Tiwari, Mr. Barun Sharma, Mr. Akash Parlani, Mr. Bhavik Shah, and everybody else who joined. Thank you so much. Take care. Bye bye.